Thank you for joining us, Matthew. We're looking forward to a really interesting session. I know you can't join us live in Edinburgh at Invest2Scale at the end of October because you're going to be travelling to Australia, which is one of Evotix's strategic locations. Today, I'd like to focus on the growth of the company, particularly with the growth in the US market, which I know has been a really significant market for you, and you've made a success of it. Whereas there are so many stories of businesses who've tried to crack the US market and haven't had success. Have had to retreat, they've lost quite a lot of money and so on. But in the short space of time from acquiring what's now Evotix in 2011, you've managed to turn it around to a very successful business, grow it in the US to the extent that it was acquired earlier this year by a portfolio company of Symphony Technology. So that you can grow a much larger group with commitment to strategic growth as a global leader in EHS and sustainability. So you are on to, greater growth and is carrying on. But let's start at the beginning. You acquired Evotix in 2011 and you've been the CEO since then, I think. Legend has it you bought the company for £1 and it was in litigation with its biggest customer. Can you tell us more about that and why you were prepared to take that risk?
Yeah, thanks, Tracy. Thanks for that intro. And sorry that I can't be there in person. As you say, I am in Australia at the moment and busy with integrating our two businesses. Yeah, so going back to 2011, yes, you're right that I bought the business for £1 on a cash-free, debt-free basis. Obviously, when you buy a business for £1, generally it has some challenges. The biggest challenge was that the business was in commercial dispute with its largest customer, which was a third of the revenues. And so kind of lots of people looking, but nobody buying. And so kind of the subtext was take a look at Evotix, nobody else wants it. I bought it for £1. And the first job was to resolve that commercial dispute. That was with a very large engineering organization. I'm sure most people will know of Mace. Basically, they'd ripped off our software solution. So we sued them for 1.8 million. They sued us for 11 million. We had a slightly nervy mediation where we managed to get a small settlement out of them, which was basically what kept the business alive.
Fantastic story. And how long did that take to resolve?
It was probably about 18 months.
Right.
So a little bit of a nerve-wracking period. And of course we didn't have the finances and the wherewithal to take them to court. So we had to pretend that we were a little bit irrational and we're just going to go through with it.
Right. Nothing to lose. But then you got on with growing the business. And how did that progress? What were the initial challenges that you faced after you got over the hump of the litigation?
Yeah, so what I saw when I bought the business was a great market and apparently a decent product because they had a bunch of customers, but really very little idea how to commercialize. And so the first job was to put in place a sales and marketing capability. It was the kind of turnaround where you needed to grow the top line fast. And so we started securing some new customers at a more sensible price, I should say, than the business that I acquired. So just to give you a sense of that, the average ACV in the business I acquired was about £2,000. And now our average ACV is sort of £30,000 or so. So obviously we've moved our price point up dramatically over time.
And did you do that on a gradual basis with customers?
Yes. There was a fair bit of churn of the tail of customers, which it wasn't economic to serve. Yep. And other customers, as we added new functionality, we sort of reset pricing and reset expectations.
Right. And this was all done from the base in East Kilbride?
Yeah, originally, exactly. The business that I acquired was based in East Kilbride. For a while that was the heart of the business, but now we're much more international. And so, when people ask where the headquarters is, it's kind of a bit of a difficult question to answer because we've got multiple offices and a lot of people working from home. And so we're kind of virtual headquartered, but now we've got offices in East Kilbride, Manchester, Chicago, Melbourne, and Perth.
Yeah, truly international. And were there any mistakes or things that you would have done differently at the beginning?
I think at the beginning, No, you said that I stepped straight in as CEO. That bit actually is not quite right. So
Right.
initially, I kept existing CEO in place. I was sort of, let's call me sort of executive chairman. I spent maybe a day or two a week with the business, and then continued with my other activities, which was sort of consulting and interim work. Perhaps I could have stepped in earlier because we had a bit of a sort of a plateau. At which point I did move out the existing CEO and sort of stepped
Right.
in as a CEO formally in 2014.
Right. Okay. So then fast forward to 2016, 2017, you'd overcome these initial challenges and you looked to take outside investment. And I think that's when we first met, was around about 2017. You were
Yes.
looking to take investment from Northern Venture Managers, which of course is now Mercia. So what was the deciding factor in taking on that initial outside investment?
Yeah, we'd been obviously very much bootstrapped to that point and operating as a classic bootstrap business, right? So very tight on cash. And a couple of times we got within sort of 10 days of not making payroll, which is kind of okay, maybe when the payroll is 100,000, but when the payroll is 500,000, that sort of starts to become a bit too scary. And meanwhile, we'd generated more growth opportunities that we could sensibly fund by recycling cash flows from existing business. So we were already on the ground in Australia and New Zealand, and we were looking at the North American markets. And I guess we knew that to enter North America was a big undertaking. Perhaps we underestimated quite how big it was, but nevertheless, we knew that we needed some external capital to help us with that.
Yeah. And if I remember correctly, the first round of investment was sort of more UK growth. And then when you took in the second round, when Frog Capital joined, that was the trajectory into the US.
No, not exactly actually. So the first investment was for US market entry. Okay. So we took an investment of £3 million in whenever that would have been 20. I think it was 2017, 2018. Yeah. And then we did a top up with NVM. And then we bought it.
Frog came in. Yeah.
So it's been I'm sure we'll get onto the US market entry. It's been a long haul, let's put it that way.
Yeah, it has. And then just sticking with the investment at first, how did you find, obviously you'd been running the business, you'd been the vast majority shareholder, and then you have outside investors and outside board members coming in. First of all, how did you find that transition to sharing influence in the business, shall we say?
Yeah, for us, it worked really, really well. I've always been conscious that a business is successful as a result of its wider ecosystem. So we've always used outside advisors and kind of sources of sort of intelligence and you don't know what you don't know, and so it's always good to have alternative perspectives. And so for me, having an independent chair and having outside investors was kind of an extension of that. We've always been very open as a business, right? At the board, there's kind of no secrets. I sort of tell it as it is. I share what's on my mind. And, by luck or by judgment, I guess I found that's worked well with investors, and you kind of end up with everybody on the same side, sort of trying to solve the problems and, providing outside perspectives, which, as CEO, it's fantastically helpful to have.
Yes, I'm sure it is. And were there ever any difficult experiences or times when you were at odds with each other?
No. it's the short. No, honestly, that's the short answer to it, because we've always been clear about what we're doing, what our plans are. We've always delivered against our numbers. I'm sure there's not the same story if you significantly fail to deliver, but we've been growing kind of 40% per annum, bang bang bang, year after year, and we pretty much have been hitting our numbers, and so it's been pretty collegiate around the board table.
So how important at the stage where you had raised outside investment were the non-exec directors, the chair, making up this larger board of advisors? How important was that with the growth of the business at that stage? Yeah,
I think very important. So I'd always taken the view that the success of the business depended on a sort of a slightly wider sort of ecosystem. So we'd always used external advisors. As CEO, you don't know what you don't know, and so we found that valuable. And when we formed a board, then really for me that was an extension of that. So kind of independent chairman, investor board members, great conversations around the board table, and great advice. And sometimes as CEO, you need somebody to sort of tap you on the shoulder and say, yeah, you need to deal with this, because particularly on people issues, right? There's always a tendency to procrastinate, or to sort of think that you can wait and see. So that's very valuable. The other thing which I think has been super valuable, particularly from Frog, has been the operating partners. So again, as CEO, you're not expert in every function. Yep. But you do need to know what questions to ask and what's important. And so for me, that's where the operating partners have been very valuable, both coaching my individual functional leads, but also my conversations with them to understand what state of the art looks like, and to make sure that I'm asking the right questions and leading the business in the right way to deliver kind of world-class B2B SaaS.
And I suppose from that perspective, Frog was a really important choice because that's their focus.
Yes, exactly. That Frog's focus is on kind of scaling up impact businesses. So obviously we were at the scale up stage, and we're also very much an impact business. Right? Yeah. How can it be well into the 21st century that we're killing 5,000 people a year in workplaces in Europe and North America? It's not like these are some sort of freak accidents. These are sort of well-known causes, caught in machinery, hit by moving vehicles, falling from height, things that are readily preventable. Meanwhile, in the US, it's not even really going in the right direction. And we're exporting a lot of that risk to some of the least advantaged in society. So people who typically are on lower incomes, maybe they're in precarious employment. So, our view is that is not acceptable. And our purpose is to help our customers to use technology to have impact on those terrible statistics. So we kind of really nicely lined up with Frog's, with Frog's sort of target investments.
Yeah, perfect. So your independent chair, who came on board after the outside investment, the VC investment, how important was that, and how did you pick the chair? Was it a collegiate decision across the board?
Yes. So that was I worked together with our venture capitalists to find a chair. We interviewed quite a few candidates, I would say. And actually, we sourced our chair via an organization, so Scale Up Group, which I'm sure some of your audience will be familiar with. They actually helped us to find NVM in the first place, and that was an introduction from them to our chairman Martin Fincham, who did a fantastic job for us.
And they're thereby kind of exhibiting your point about taking lots of outside advice and support at the right time.
Yeah, exactly. I mean, as CEO, it's a lonely journey. So there's only some things you just can't discuss internally. And I've always found it great to have a range of external advisors and sort of thought partners.
Yeah, great. Excellent. And I know slightly different topic, but I know that from early on, some of the employees had shares in the business, and yes, stock options as well, but shares from a fairly early stage. How important do you feel that was to the growth and to building a team?
I think it's very important for the early employees, particularly when I took over. The business has had a bit of a checkered history. I felt I needed to kind of build confidence and a sort of a stake in the future. And so, those very early employees did very nicely out of their shares and options. And then as we hired additional staff, if they were in key roles, then the alignment that's created with options is powerful.
So then turning to the US, you've got your 2+ rounds of investment, outside investment, and you decided it was the right time to expand into the US market. I'm assuming you saw that as a very large market for the business. How did you fund the expansion? Was it all from outside investment? Because it is an expensive proposition. And I guess two questions in one. Did it turn out to be as expensive as you thought, or was it even more expensive?
Yeah, I mean, it's been a long haul. I mean, I suppose if you look at the economics, the UK business standalone was sort of slightly cash generative. So, at least in principle, a little bit of the investment was funded out of the UK business, but substantially it was based on sort of the external investors joining us. Yeah, I mean, it's a tough gig going into North America. Why do we go in? Well, because, as you say, it's a big market. We'd been to 2 or 3 trade shows. We'd had great conversations on the stand. We kind of had a good sense of what US customers were looking for and felt that we had strong product market fit. But nevertheless, right, you're going in with no name recognition, no brand, no referenceability. And initially it's just hard miles to kind of get going.
And you spent quite a lot of time there.
I did initially, yes, exactly. Yeah. Exactly. I probably spent about a third of my time there for sort of the first 18 months or so. But when we went into the US, we fully committed. And what I mean by that is that we didn't just hire a US sales team. We hired all of the roles. My first hire in the US was Global VP Talent in Chicago. Our VP Product, now Chief Product Officer, is also stateside. And so I ended up with sort of about half of the leadership team stateside and half in the UK. So, once we had that kind of leadership on the ground, and of course then COVID came along, so I couldn't travel anyway. And since then I've been there regularly, but not quite as intensively as initially.
So you started with the senior roles and then they built the team. Yes,
well, so VP Talent was the first role, and then obviously the sales roles.
Yeah, and some would see that as controversial. I've heard, taking on a talent VP as the first role rather than sales, but it's clearly been really successful for you.
Yeah, I've got a passion for developing people. Right, we're a very strongly people-centric business, very strong culture, and we'd got to a stage where I needed an HR person, but it wasn't, in my mind, it wasn't an HR person. It was a talent person. I see those as sort of complementary but slightly different focuses, right? So Kimberly, who joined us as our first US employee, has been, very, it was a great hire and has had kind of huge impact on the way that we've grown from at that point, 50 heads. Now we're at sort of 270.
So have you found that part of the sales strategy in the US is educating customers and potential customers on the EHS market?
Yeah, there is a difference in the maturity between the UK and the US markets, and there's a greater degree of education in the US. I think traditionally US has been a compliance-led market where companies kind of do, look at the rule book, figure out whether they're likely to get caught, and sort of do the minimum and follow the rules. But that's all changing, right? We can see the big societal changes, right? Yeah. We expect our enterprises to be good corporate citizens. And, partly this is a generational change, right? So our investors, our customers, our employees, increasingly are from sort of the millennial rather than the sort of the Gen X. And millennials have a different perspective on these things. And so we're absolutely seeing in North America an appetite to do the right thing and to manage safety properly. And clearly, sending your employees home injured is not being a good corporate citizen.
Yeah, all positive then. And I know that the office in Chicago, you mentioned that earlier. How important was location to a business which is, as you said, is a global business and is virtual to some extent?
So Where we have offices, generally speaking, it's where we have grad populations.
Right.
So one of our big successes has been our graduate program into entry-level roles, mostly kind of SDR, BDR, so the entry-level sales roles, but also solutions consultants and engineering roles. So we have big BDR teams in Manchester and Chicago. And so, important, therefore, to have a physical presence for those teams. As we thought about US location, I guess we were looking at a couple of things. One was time zone, so we wanted to be East Coast or East Coast-ish, and strong flight connections. So that kind of ruled out some of the secondary US cities, and we kind of looked at Boston and Chicago as our main options. In actual fact, of course, neither of them are very cheap locations to be in. So there is that trade-off, I think, between potentially a secondary location versus the depth of talent pool that you get in one of the primary locations.
Yeah, I think, and location is really important from what I can see. And I think it's easy to underestimate the time difference and how, practically speaking, that can be pretty challenging as you move on and progress in the US. And as you say, flight connections, super important as well. What other changes did you make to the business in the US market? I think the name change was partly driven by the US. Is that right?
Yeah. So we rebranded 2 years ago to Evotix. Maybe partly driven by the US market. Certainly, previously we were SHE Software. So SHE is a known acronym in the UK, Safety, Health and Environment, but in the US it's EHS. Yeah. And so SHE wasn't well recognized. And I guess, there was a little bit of a, what do you do, sort of women's clothing or something. So that wasn't particularly helpful, but it wasn't just the name, right? It's the whole kind of set of marketing assets and brand essence. And for us, that was, of course, about our kind of market positioning, but it actually also was a very cathartic event for our employees. It was kind of a little bit of a sort of a relaunch. We did values at the same time as brand, and that was a very powerful exercise for us. Yeah.
Great. And what about the sales and gaining customers in the US? I've heard that can be a pretty slow grind. How did you, or what challenges did you face, and how did you overcome them?
Yeah, I mean, it's just tough going. We're on our third sales team, so very difficult to hire. I think that's kind of well known.
Absolutely.
First and second teams didn't really work out well. I'm not sure that I've got any silver bullet on that, right? You kind of do your best, but within this group, US salespeople are very good at selling themselves, and sometimes, with the best will in the world, it's very difficult to see through what the truth is. But we're in a much stronger place now, and I guess the other thing that I would say is that we're much clearer now about our playbook and what success looks like. And, perhaps initially we listened too much to the perspective that, look, the US is different to EMEA. We need to do it sort of the US way. And of course, there is local nuance. So I don't want to underestimate that. But, we have an established way of selling. We know that it's successful. And, we're now much more rigorous in applying that methodology in the North America market. And that's demonstrating success. Yeah.
It's really interesting because, I've advised businesses expanding into the US for years. And the themes I've taken away are one of the main drivers of success are if the CEO or other chief advisor to the business relocates or at least spends a lot of time in the US, that the first sales team will never be the long-term sales team. I mean, these seem to be truisms, no matter what the story is in the US. But you've built a great brand there and a great business there, which is fantastic. So taking us up more or less up to date, earlier this year, you exited from the business, or sorry, not you, but the business was sold, and you've carried on. The team have carried on. Did the exit process go as you'd intended? I mean, clearly when you bought the business, you had an exit at some point in mind. How do your expectations and the reality of the exit match up?
That's a difficult one to answer because when I bought the business back in 2011, I didn't really have any particular expectations at that point. I kind of backed myself because, from my kind of consulting and general management background, I knew how to run businesses, but I had no background in software or health and safety. And so that's been kind of a learning journey. And of course, over that time, the potential of SaaS has become super clear. And so, the expectations kind of grew over time as we realized what the potential in the business was, and, how to build a great B2B SaaS business. So we went into the sale process. I guess having seen a lot of consolidation in our industry, right? Some great deals, and the word on the grapevine was that there were lots of disappointed buyers who'd missed out. And so, and given the economic uncertainty last year, we wanted to at least test the market and kind of see what the appetite for the business would be.
And it seemed a very well planned out process. The exit process, well managed. You had a strategy. You engaged advisors fairly early on, and you set out a timetable. Do you feel that helped to manage the process more efficiently?
Yeah, most definitely. We use William Blair. They were great. We couldn't have done anything like that without the outside help and advice. In terms of course, prepping ourselves. I mean, we had our data in fairly good shape, but nevertheless, there is a way of presenting a business for sale, which is there's a kind of an art to it. But I think the other thing is all of the sort of off the record conversations and nudges and hints and sort of help along the way, which I don't think we would have been equipped to execute on.
Yeah. And obviously the law firm that you worked with were great as well.
Indeed, yes. No, so yeah, exactly. So William Blair were our primary investment bank, of course, but yes, no, we've always had a great relationship with MBM. Tracy and I think really value the help from you and your colleagues. I know this isn't exactly what this is about, but what I've found is not many lawyers are sort of practical. A lot of them are sort of like to stick with the letter of the law, and you need the right blend of sort of legal and commercial background to make it work.
Yeah, great. And any sort of words of advice for those in the audience at our conference at Invest2Scale who are looking to grow the business and exit? I think you've provided a lot of great insights in this conversation, but anything else that you feel you wish you'd known 5 years ago, 10 years ago?
I mean, that's a difficult one to answer, isn't it? Because it's always a journey. And, at each stage, you're kind of learning new stuff. As I say, I might have stepped in earlier as chief exec because I think that could have had earlier impacts. With hindsight, I might have waited another year or two before entering the North America market, because at the scale we were at, that was a big ask. But these things are all easy with hindsight. And in the end, I think we got ourselves to a great spot. Yeah,
it sounds like it. And then bringing bang up to date, you're now integrating Evotix into SAI 360. How's that going? Is that probably a very busy time? But is that something you're enjoying?
I am enjoying it. Yes, it's a slightly different experience again. So kind of learning fast. Now we've got private equity owners. So learning how private equity is different to VC. They have their kind of expectations, but kind of built good relationships, I would say, on the private equity side. There's a little bit of we thought we bought you going on, because actually the deal here is that Evotix has come in with a great business model and a strong team, and we're integrating with the EHS business within SAI 360, which has been a division of a larger corporate and therefore doesn't actually have kind of a business level leadership team. So it's more of an Evotix takeover of that EHS business. So as I say, there's a little bit of a sort of we thought we bought you, which I think takes a bit of time for people to come to terms with, but we've built great relationships now, and that's kind of moving forward nicely. And then ultimately the plan will be to create a separate EHS business as part of the STG portfolio. Fascinating journey, really interesting. Well, thank you so much. Really great to see you flourishing and enjoying the new role, and great to speak to you. Thanks so much for joining us. Great, thanks, Tracy.